Hey friends, welcome back to the channel. Today we're talking more trade setups for this week. If you trade Forex, futures, commodities, doesn't matter. We've got a couple things I want to show you on today's video. Let's jump right in. All right, guys, so a quick start here today. We're going to jump right into things. I want to show you guys the dollar's price action recently. We had a big slip to the downside last week after we had CPI, we had PPI, and of course we had the Fed, all of which contributed to a pretty good downsized move on the dollar. Whether or not you think that the dollar has more downside, we at least need to talk about the numbers. CPI and PPI both showed cooling inflation last week, which really contributed to downside on the dollar. Then we had the Federal Reserve, which in their commentary made it sound like they had more rate hikes in plan, but it does seem like the market believes they are bluffing. Meaning, we can see this, sorry if I could type, SPX 500, we saw the indices jumping, rallying strong last week, especially the NASDAQ, which had an incredible move to the upside. This is a 4-hour chart. But back to the dollar, again, the market's expecting that the Fed is perhaps going to do maybe one more rate hike, but it does seem like from the market's perspective that the top may be in for Fed funds rate stuff. So where does that leave us with the dollar? Well, again, if inflation comes down, and we have to talk for a moment about core inflation is the less volatile components of inflation. This removes things like energy, it removes things like food, which are the more volatile components of inflation measurements. Well, core is still pretty high, but expectations are for this number to continue to decline. Cooling inflation means the dollar will likely decline because the Fed funds rate will be less likely to keep going higher if they're already accomplishing their goals with inflation. That, of course, drives the dollar down. And so in my perspective, if we do see a continuation push to the upside on the dollar, I think it may mark a short-term top and that we could continue to see the dollar fall. This is a healthy pullback from our big drop last week, which again, we saw a 50% retracement land us right around here, 102.7. I think personally that could be an opportunity to sell the dollar. Now, again, just my opinion, and I can be wrong, but let's talk about some specific currency pairs real quick. So for the currency traders out there, euro dollar, in my opinion, looks pretty attractive if we get a move back down to 1.086. This is a ways away, but we have a nice upward trend, and I think that one has room. Pound USD is our next one, which shot to the upside very strong recently. This one may be an opportunity to pull back and be a buying opportunity due to the divergence between central banks here. Let me show you what I'm talking about. So we're looking at the UK's short-term interest rate forecast, and you can see that things are expected to stay high for a while. Inflation is still very hot in the UK. Eventually it's expected to fall, but things compared to the US look way more hawkish in the UK than in the US. Again, US is expecting to see rates go maybe just mildly higher before coming down, and inflation is further under control here than it is in places like the United Kingdom. But we also have to take a look, we mentioned euro. Here's something that I think keeps the euro looking very attractive compared to the US dollar. Interest rates, there's no expectation right now in our data for rate cuts, whereas in the UK and in the US, we do see some opportunity for rate cuts along the way. Inflation is still high, but it's coming down, again, more mildly than it is in the United States. So when comparing these central banks, we would say that the euro, in my view, is more hawkish compared to the US, which I wouldn't say is necessarily dovish, but it's getting closer to rate cuts in next year's forecasts. So I would say that comparing the euro compared to the US lends towards more upside in my personal opinion. So after a big run up like this, I'd be looking for that pullback, but I think that there could be continuation opportunities when looking at the euro and when looking at the pound. Let's take a look at gold here. Many traders have been asking me, Nick, are you going to buy gold? Well, the EDGEFINDER is bullish on gold, and you can see it right here. It's got a buy reading recently. We've got a buy reading with a short-term target of 1970, a positive score of 4. We score highly in COT data. Retail sentiment is mixed. Seasonal trends point to upside in the month of June. Let's go take a look at seasonal trends for a moment, and we can actually see what I'm talking about. So let's filter for gold here real quick, and we can pull this this one up. So we're isolating just gold on the seasonal trends chart, and let's take a look. All right, so we're looking at gold here, and you can see that in the month of June, which is the current month that we're in, we see a average last 10-year gain of around 0.55%, and in July a 0.59%, followed by August, which is a 1.26% average in the last 10 years. We focus very heavily on seasonal trends. Again, this is a data component available within the EDGEFINDER. If you do not already have the EDGEFINDER, let me tell you how you can get access to that right now. Okay, so this is something especially unique to this video today. If you guys are not already aware of our 50% off VIP sale, we are currently offering 50% off of our Discord channel, but you can also, as part of your package, get 50% off the EDGEFINDER. And if you message in right now, you can actually get even more than that by messaging our support link. Now there's a link at the top of the description. And if you click that link, it's gonna open up a talk to, which is our live chat support center, where you can speak directly with people on my staff. So click this link, and all you have to do is go to the 50% off VIP sale, which will allow you to get half off any of our Discord memberships, which include all of our trade alerts, our coaching webinars, our chat rooms, and more. And as part of this, you can actually get the EDGEFINDER 55% off if you message us. You have to message us in order to get the extra 5% off discount. You can get another 5% savings if you message us. Again, this is linked at the very top of the description down below. So just click that and it will direct you to a conversation with one of my staff. So again, back to seasonal trends here. Gold looks optimistic here towards the end of the summer months, and I will be watching this one closely. And then we get some negative feedback or some negative expectations in the months of September, October, and November. So I'm looking for the meantime to be a buyer on the gold market. But let's take a look at price action. So for me, this chart has been so choppy and really frustrating to watch, but I'll be looking for a breakout above, as I have been for the last few weeks, of this 1965. If we can break through this level, that would be a key indicator for me to look for long side pullbacks into an upward trend. So that is a chart that I'm very interested in. The EDGEFINDER does have bullish bias on this one, but I have to see breakouts. And again, short-term targets are a move up to 1970. So we'll see if we can find that one going forward. And here's a quick look at the Smart Money Tracker, which shows us the latest COT or institutional money moves. We can see that gold is still very much bought by institutional traders. But I also want to talk notably about some of the indices here really quick. Let's isolate some of those and take a look at that. So we have US 30, which is the Dow, we have the S&P 500, and we've got the NASDAQ. And I want to show you guys something that's really just dramatically interesting to me, as I have been bullish on the indices, and I love to see this particular fact right here. Under the change in short contracts column on our EDGEFINDER's Smart Money Tracker page, we can see that big money has been moving out of shorts on the indices. Now, notably, the S&P 500 had a dramatic decrease in short positions and a large decrease in both the NASDAQ and the Dow. This shows me that things are starting to unwind for the bears on the hedge fund side, and it does seem like, for me, the indices have more upside. Now, I should say, just because I'm bullish does not mean I'm buying up here. I'm looking for pullbacks this week, and if I can get it, I will be looking to try and add into a long position here on things like the S&P. So perhaps an initial buy attempt for me would be around 43.80. Yes, the market has run hot, but again, I think this unwind trade may cause for a really continuous uptrend for the remainder of this year. We'll see if that is correct. Yes, I think there will be pullbacks in the interim, but overall, I think this unwinding trade, we can see it in the data. We can see big money is moving out of shorts and into longs, and I'm very intrigued in looking to pick up more long side action on my own. Now, this year has been a really big year for my trading account. Last year was really tough on the indices and gold trading for me, but this year has been incredible. We've made back all of the losses and more from last year. I've talked about that pretty openly. Last year was a tough year for my indices trading, but this year has again made up for all of that and more. So I am looking for more pullback buys. I'm looking to trade this patiently. Again, stops below structure. If I need to attempt more than once, I will do that. But again, that is my plan going into this week. For the indices, that's the S&P. Same thing with the NASDAQ. A deeper retracement down into this 14,900 or 14,800 may intrigue me to try and pick up longs. Again, with tight stops and looking to try and trail into a profit. So That's my take on the indices. Now, Ivan made an amazing point here today that I want to show you guys. If you're trading gold, indices, or even looking at things like bonds, this next clip is going to be really key as Ivan talks about the triangle of different asset classes that institutional hedge fund managers and that sort of thing will be looking at. Check this out.
It's a I don't know if it's the triangle, but it's a triangle that I have. It's allocation of funds, mostly by hedge funds and pension funds. Where do you want to be? I think that I believe that the rate of return that pension funds wants is around 5%. So if you only buy bonds now, you get 3.75%. That is not enough. So they have to invest somewhere else. Where else do they go? Okay, either indices / equity or commodities to get that return that they need of 5%. Now it also comes down to risk. So if there is lower risk in the horizon, you would then go to commodities and indices, and in which of those two categories have the least amount of risk with the highest amount of return. So it's the constant evaluation analysis of where should you be mostly allocated. And this is what traders do every day or on a regular basis in terms of where is the best profit to take. And right now, indices or stocks is raising more than gold. In commodities, so that's where the allocation is right now as of we speak. But over time, you want to be adaptive to the market conditions that is out there.
Yep, beautifully said, and I think it should be a triangle. If it's not already a well-known thing, we'll call it Ivan's triangle of assets. So we'll lock that in stone. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.